Hello and welcome to another edition of Business and Banking Dialogue, your daily one-stop, one show that gets you the best from the subject matter experts from this financial, technology, and payment industry. Today, our topic of discussion is about the the payment cards, the future of payment cards, as we call it. So, ladies and gentlemen, we have been hearing these often, these kind of sentences said to us that cards are replacing cash, tap to pay will transform card payments, cardless is the new way, and many such things you must have heard, right? The introduction of plastic card was a sweeping change in the way payments were done, maybe few years before the plastic card came into being. However, the advent of new technologies is fast fueling a dramatic change in the card payment space. Cash to card, card to mobile wallet, wallet to wearable device. It's all happening with innovation delivering increasing convenience to consumers. The payment card industry is all set for a big change. So what are the changes that's coming up? How and when? To discuss the future of card payments, we have with us today Mr. Mahesh Ramamoorthy. He has been in our show before, if you remember, ladies and gentlemen, and he has widespread and varied experience in the card industry. Ladies and gentlemen, I'm KK, your host for today's Business and Banking Dialogue show. We bring you this show across EPS channel, Facebook, Twitter, and just a minute, Twitter and LinkedIn too. So let's look at the card industry. So Mahesh, before I go into the questions with Mahesh, let me introduce you to Mahesh. Mahesh is the Regional Managing Director, APMA, Banking Solutions, FIS. He has also worked with Electra Card Services as their COO, Barclays Bank as Head of Consumer Banking Technology, and in Development Credit Bank, DCB as it is popularly called, as their CTO. Good afternoon and welcome to the Banking and Business Dialogue show, Mr. Ramamoorthy. How are you?
I'm pretty good. Thank you, KK sir. Really appreciate this opportunity and look forward to providing my views, which may enlighten the entire audience and probably have a very good dialogue. Thank you.
Absolutely. I'm sure we will have a good dialogue. So before we go into the things of evolution and other aspects of payment cards, I think most participants, including me, would like to hear from you upfront. What are the top trends you see moving away from card payments?
So here is my take. So one is, I think card payments has been the stable mode of payments up until probably, I would say 18, 24 months ago. I think with the evolution of real-time payments, with the evolution of adoption of more and more opportunities across how we can have direct-to-account payments, I think we are seeing opportunities increasingly outside of card payments, which is around real-time payments. It's about how you look at converting cash to digital using various forms, which allows you to go around the cards, but also having a lot of platforms. So I would say that if you ask me, cards is one core. You have direct to account. You have real-time payments. They call it in flavors as faster payments, real-time payments, different approaches that each one takes. Yeah. And more importantly, I would say is about how you create the frictionless environment for all of these payments to be delivered across multiple devices, or I would say acquiring devices. I would say that is very critical for us to enable these payments.
True. So when we talk of payments, the first thing that really comes to our mind is the security. When I make a payment, is my payment secure? Is somebody snooping into my credentials when I put in? Is what is something which concerns everyone. What are the technologies and security models that are emerging to ensure citizens are secure while making payments?
That's a great question, KK. So if you look at it, we started off with a simple Max Stripe. If you just rewind back, we started off with a Max Stripe. Max Stripe had its own set of challenges. And we evolved it to EMV.
Yeah.
EMV is essentially gave us the additional layer of security that we really needed. Now, as we see it, is that we're also seeing increasingly the ask for tokenizations, and tokenization in terms of how the card itself is, the data itself is tokenized from the card data itself and the card number. So there is going to be an evolution moving into the tokenization zone very soon. And it's already picked up in a long way in multiple, I would say, countries. Tokenization of the data is very, very critical. And we do see huge opportunities coming up in that space. And most of the card brands are now sort of getting into a mandate situation eventually, where tokenization will make sure that there is a pseudo card available, and your real card is never ever exposed for any transaction. So there is, and then on top of it, you also have increased levels of security that is coming by virtue of the next version of PCI. Their ask around what are some of the additional factors of authentication that need to be, and the layers of control that need to be pulled in. So if you look at it, there is security that is being enhanced at an end user point of view, and from a usage perspective. There is security being enhanced when you look at where the data is stored and how the data is essentially accessed. So effectively, there is fair bit of enhancements happening, more in terms of the way a transaction happens and the way the data is stored. I think these are very critical. And obviously, we have other general law protections that are happening across the world, whether it is in terms of the GDPR or other forms of data privacy norms that are coming in, which essentially gives you a lot more privacy controls, which gives the level of protection to a customer information. I think that I would say, while they are slightly distinct, but they still converge when you create a security-related overview for a person's transaction.
Okay. So, Mahesh, we have heard about tokenization, and I heard even for the UPI, the tokenization was being developed and as a way. So, what's the status? How does it work? And when can we see the introduction of tokenization for card payment? But that looks like it can hide all the confidential data of the citizens. So that seems to be good. So when can we see this coming through?
It's already started in a way. It has started. It's about the adoption today. What happens is, any such major change does take its time for adoption across a large number of acquiring and issuing points. I'm saying is, so in my view, is the journey is on. I would say the adoption rate is pretty high. We should see from a card payments perspective, once it gets into a mandate mode, over the next 12 to 18 months, this being effectively de facto. So I'm saying is today, both the card brands have started to provide that as a service. There are quite a few organizations which are independent organizations which provide you those tokenization services. So do see this as an eventuality and will come into force, I would say, as regulations and mandatory asks over the next 12 to 18 months. It's not a long window, but yes, everyone has to be geared up to support it.
Okay. So talking of security, I want to touch one aspect, of secure payments, and maybe a differentiated services also will come along with it. What we don't have is like a CIBIL, for a kind of CIBIL rating agency for payment transactions or for payments by itself. Okay. So do you think an agency like CIBIL could be in different form, which can rate transaction, which can provide to the payment company itself a rating, and thereby the customers and the citizens feel more secure when they do transactions through these models. Do you think such a possibility is there?
Yeah, I think you hit upon a very important point, KK. If you look at it today, a lot of the CIBIL data is pretty much used, the start point of any onboarding. There are certain other information, transactional information at an AML level, which is used for certain I would say NEFT or kind of cross-border transactions. I would say that every bank trying to build its own enterprise risk and fraud capabilities and the back of emergence of digital payments will not be a sustainable model, because eventually what will happen is there'll be 80% that will be commonality that has to come in play. And when you look at that kind of a commonality, I do believe that an agency which really brings with its own play in terms of the authenticity, the integrity part of the story, and in terms of the layered technology around artificial intelligence, I would say and with a huge amount of data analytics, I would say that such an agency or such an aggregator of information would be able to provide more realistic information for an online digital payments. Subscription-based approach to such a service, I think, would start to become a differentiator. I'm sure there are people who have started thinking about it, or started to play a role in it. But you're right. If you look at it, if I look into the horizon over the next 24 to 48, 36 months, an aggregator who really provides online transactional, inline, I would say, inline transactional fraud analysis, who has the ability to do real-time fraud checks across multiple, I would say, multiple channels and multiple modes of transactions for a particular customer, I would say would be a distinguishing factor. And hence that will allow a bank to mitigate over 60 to 70% of the risks. There could be still banks holding back that information, which would be more private to an organization, and also will depend upon the kind of risk appetite they would like to take on. So to me, yes, long-winded answer. In short, the answer is yes, there will be an evolution. There will be players who will create their niche in this space, who will create a great opportunity segue to build out on the back of information. There will be some underlying ethics and ethos that would need to be built around such an environment. But I would see that eventually happening rather than individual data marts and silos being created by organizations.
Thank you. To know your views on that, something I thought was missing, because it also gives the payment companies a differentiated model for differentiated customers who are of compliant in nature, who are law abiding and everything. So their transactions can be kind of differentiated and get perhaps better services than the rest who are non-compliant. Just a thought, and I thank you for seconding the thought. Talking of security, let me dwell upon one more point, which is the biometric payment cards, which supports multi-factor authentication, fulfilling the who you are factor requirement, and in working in collaboration or in conjunction with what you have, that means a card, and what you know is a PIN. So where is this biometric payment cards picking up?
So it's a good point, KK. I'm saying is biometric cards, in my view, will pick up. I'm saying there is no two ways about it, because these are the best alternative mechanisms. It would find some resistance over the next short term because of the concern over the usage of biometric and the devices that support the biometric, given the kind of possibility of picking up corona, the virus and everything. But eventually I would say that alternative forms of, I would call it as alternative forms of verification or validation of an identity would become the norm. I wouldn't say PIN is the only one. PIN would probably be pass. You have face IDs today becoming very, very ubiquitous on any mobile. You will find uh, retina-based acceptance, which I've talked about in the previous in this show,
Yeah.
that biometric will probably very soon be replaced with retina-based authentications. And today there are that data is already existing with the government of India that are existing for every citizen who's registered into the Aadhaar. So which means that you will find a slight delay and which is getting biometric is good, but there will be alternate forms which will go fast. And it will be effectively in the privacy of an individual will also be happening. So when I say it is for individuals who probably who use their mobile to do their entire transactions and give through an NFC or something,
Yeah.
that kind of validation will happen within the mobile phone, depending on whether it's a smartphone or a feature phone. So you're going to see differentiated approaches there coming very soon. So the 2FA part of the story will be fairly well evolved than what it is today. So yes, I do see change. I do see shift getting adopted very fast. Biometric may be one mechanism.
Yeah.
It is always touted as a great breakthrough for across the world. As you know, most of the, if you look at a lot of the surveys and the way forward technologies, they talk of biometric. But in my mind, it won't be biometric only. It will be a combination of either your retina, biometric, and a few others, which will allow you to have different modes of access. And you can prefer and choose which one you would like to use. So I'd say uh, you will find increasing alternative authentication mechanisms being adopted and being put to use more effectively.
Okay. So as since you are the global head of the ASEAN and the Middle East and Africa head of FIS, would you be able to tell us if there are any such clients who are looking for the kind of biometric or the combination of biometric demand or somewhere else?
It is. I'm saying is I would say given the kind of breadth of clients that I currently manage across Asia Pacific, countries have started to talk about frictionless payments starting at the ATM, right?
Yeah.
And when you say frictionless payments is, I'm not even going to use my card. I'm just going to use my mobile to initiate some things. I'm going to give everything else. It's going to be just, I need a cash out. So there are changes that are being sought. There are changes being sought in terms of how you can do any kind of purchase at a point of sale using the convenience of your mobile phone or your cards. So I do see changes happening. I do see adoption starting. It is a bit slow because I would say that some of the developing countries are still prototyping it, adoption rate, because adoption rate is still low. And that's low because the investment in the point of acquiring terminals is still not yet up the curve. To me, that is going to be the differentiator. The day that becomes affordable, secure, I would say the drive will become the need to go into that mode is going to become easier. Today, we still are. If you look at even wireless tap and go, it's still not all over the place. It's still about say 5%
Yeah.
of the ecosystem. But as you move into the kind of biometric and approaches, I think it's a combination of the issuer plus the acquirer having to work together. So I would say there's still some time away. We've got a lot of interest from multiple other geographies. But whether it gets into a reality, my view on that would be it's anywhere between 12 to 18 months, nothing short of that, because you will still go past its resistance curve, in my view, resistance way, and then go up like a hockey stick.
Yeah. It's good to know that, it's 12 to 18 months is not bad, because we see a change, right? So we can see a different way of doing payments, frictionless. If I can go to an ATM and use my mobile, I think that's a great change that's coming up.
It does
Right.
exist, huh, KK? It does exist today also. I mean, I'm saying there are banks, but it is not truly frictionless, and that's the change. It's not truly frictionless. You still have to touch a screen there to initiate. It's all going to be about how I don't even touch a screen. I just walk in. Can I create a different ecosystem to get my cash out? How do I use a mobile, and how do I use a voice? There's so many other technologies today available. So it's going to be interesting to see how you're going to be able to do all of that and make it touch free. Let me put it that
touch
way.
free. Yeah, absolutely. So yeah, it's great. It's good to know that it's there. Maybe the screen comes on your screen, on your mobile screen, the ATM screen, and you touch whatever you want to touch.
Exactly.
The cash is available to you. So great. So ladies and gentlemen, as you see, this is getting interesting. We have a whole lot of things to talk about in the way the future of payments in terms of cards, and we will go into more and more about it. We touched upon the security aspect of it, and Mahesh has come out with so many good things, so many exciting things that we can look forward to from the ease of doing payments, as well as on securing ourselves from any kind of payment issues, payment frauds. So while I engage Mahesh into further discussion, I would request you to please put up your questions in the Q&A box, the chat box, and send it to us so we can ask the question to Mahesh. Try to send it as early as possible. Or you want to ask a question directly to him, you can. We are open for that. You could ask a question directly to Mahesh. Thank you. Let's look at two other aspects, the open and closed eco-payment systems, Mahesh. Okay. What do customers value more from a payment services provider? Okay. So let's look at a payment service provider. The convenience of being able to conduct the entire buying experience, including payment, on a closed all-in-one platform, or the choice of buying whatever they want, however they want, that is enabled by an open ecosystem. So where do you think the trends will be in these two ecosystems, open and closed?
So KK, everything has its own advantages and disadvantages. When you are in a closed loop, what are the advantages you bring to the table? You bring to the table an advantage of creating high levels of security, high levels of I would say of transaction repudiation, controls, settlement capabilities. All of that come pretty simple, easy. You can define how you manage your limits. A lot of things come in play, right? Because you control, whoever is the issuer and acquirer, control the ecosystem around it. What really has limitations around that, which is where open approach really helps us, is about the acceptance. Today, a card in itself is just a piece of plastic with a convenience if it's not in a position to be used across a large acceptance ecosystem, whether it is online or whether it is offline. Without that, you just are going to be limiting the ability for your client or your customer to spend or to do certain value-added transactions on top of it. So, in my view, where open really scores is you have a large ecosystem of acquirers who start to fan out, create new acquiring mechanisms, create the channel agnostic approaches to acquire those transactions around a very standard security framework. The security frameworks are where a lot of the card brands, the regulators define the approaches. So there is genericity, generic approach there. When you create the generic, there are flaws, there are delays, But now, over a period of time, last 25 plus years, we have seen that the ability of the card brands and the acquirers to create a much more intense, uh, playing level playing field with a touch of better customer experience has led to open loop based cards being further best accepted. So I would say that uh, clearly in the card space, being open is better.
Mhm.
Being open allows you larger acceptance. There are some downsides. I do agree. There are some downsides to it, but I would say that those downsides get fairly offset by the opportunity that is provided to spend.
Mhm.
So I would obviously recommend an open. And we today have within our own country, we have a fantastic card brand that essentially is playing it pretty well and has given some of the larger card brands a push. So I would say that uh, go for an open.
Mhm.
Innovations are coming through there, and to be able to play that field much more in a secure manner, create a backend ecosystem that allows for much more faster, effective settlements, uh, and in terms of the ease of operations, is going to help the situation. So, open in my mind is still persists. We still have some way to go in some of those areas, but I would recommend that anyone looking to enter every other PSP in India
Mhm.
looks to see how they can get a sponsor bank to get onto an open bandwagon. So I would say that that's the way. And even some of the card brands by themselves are opening their strategies to look at how they can go beyond traditional banks.
Mhm.
So, which means they also are beginning to see the need to create more acceptances, uh, create more new viable alternatives to physical plastics. So, these are going to be some combination of innovation, combination of how you enable user experience,
Mhm.
uh, and combination of creating lifestyle-based trending, which is going to allow you to create more acceptances on the open loop side.
Okay. You see this open system ecosystem catching up also globally in the Western side?
It will everywhere. It will, and it will. I think
Okay.
I would say without a doubt it will.
Okay. Thank you. So let's look at another aspect. The progress of payments from cash to cards, has been happening for many years now. However, as per analyst reports, the pandemic has accelerated more towards a virtual card, the kind of virtual cards. What are the reasons for the meteoric rise of virtual cards?
Well, I think as we, if you look at the pre-pandemic, a lot of the players were looking to create differentiation models using virtual cars. Today, the pandemic has reduced your options and says that you want to use it and you want to go, you pretty much don't want to remove your plastics. You want to use your digital environment to pay for it. Now,
Yeah.
which means that you're limited with options, right? You're limited with options. And you get across, you always are still, there is a fear psychosis in your mind, which essentially says, do I still use my card at a point of sale terminals? I don't know how he or she has utilized it, has cleansed it, sanitized it. A lot of
Yes.
questions come about. So having virtual cards, having the ability to use the virtual cards on those acceptance on the terminals is going to be the game changer. Today in India, we're still behind it, fairly behind. I would say we just at about 3-4%, nothing more than that. So to me, uh, virtual cards are the way forward.
Mhm.
Creating customer experiences and the usage of virtual cards combined with certain other new forms of payments that are currently rising up in the market is going to create a differentiator. Acquiring banks will begin to see how you will use virtual cards from a person's mobile phone to be able to do a transactions. Now we've had some success, huge success stories on that in the West. Huge success stories back in Australia. If you go down to Australia, you don't need cash. You can just walk across anything using your mobile-based virtual card. So there are models that are going to be well accepted in markets like India, which is an alternative market to where you look at real-time payments. So you're going to see those transactions, those kind of models emerging. And I'm pretty convinced that you're going to see a huge spike of virtual cards combined with front ends, which are going to create better experiences.
Yeah, that sounds exciting. Would you be able to tell us a couple of examples? Say, you said in Australia there is something like that. So how does that work?
Yeah, you just, you have Apple Pay, you have Samsung Pay, you have now um, all those Apple themselves have launched cards. So, yeah, you
Yes.
have those into your virtual cards and stored into your mobile phone with its right levels of security. You walk into any store, as long as the acceptance of that kind of mode is there. Uh, I'm saying is if the terminals are accepting those kind of payments, you're good to go. I'm saying it's so convenient.
Yes.
You're not even opening your purse. You're not doing anything. You have a mobile phone. You walk into a Starbucks. You can pay in hardly under 15 seconds and walk out. So, and it's absolutely a smooth, frictionless transaction that happens. Now, why are we not able to do it here? It's only a matter of time. To me, it's going to, the acceptance, I would see in a few terminals it's happening, but eventually in the next, I would say, uh, 12 to 18 months, this is going to only increase. And it's only get accelerated with the pandemic situation.
Oh, okay. Yeah, I
So,
hope.
now, why are you looking only at cards or prepaid? Debit also. You have a debit, you have the capability embedded, you're good to go. And now someone is going to create a differentiator in the Google Pay approach. Now someone is going to be another aggregator of services. Look at the way that you could use a payment checkout mechanism, which essentially uses multiple forms of cards embedded in your mobile, combined with UPI or something, and push transactions on QR. If everything is there as one common view, as a software, as a kit within your mobile, you're good to go. You decide what you pay, how you pay, you control it in your mobile. And should you lose your mobile, you have the ability to lock everything out or wipe it out. Now, those are the options today available. Not many know about it, but you can.
Exciting. I think that's you should look forward to virtual cards. Ladies and gentlemen, I hope you're with Mahesh and the exciting prospect of using your mobile phone and virtually doing everything that you do today without the cards, the pins, and all that. So good to hear that. He feels that that's coming very soon into India also. It's a matter of adoption and having those equipments there. So Mahesh, you talked about the Apple Card. So this was launched Apple Card came around 2019 August with Goldman Sachs as the issuing bank. Similarly, market is abuzz with the news that Google is all set to launch both physical and virtual cards. What is the driving the big tech firms, so the biggies of the techies, to jump into the fray, and how would it alter the payments landscape?
See, it's a good question, and my viewpoint could be very tangential. Let me, there are a lot of people who may differ to my view, but I carry a very different viewpoint. And to me, most of these large firms are getting into the transaction because what's happening? There are two things happening. One, they don't control the financial aspect of a client who's transacting on their platform or using their platform, right? They lose that information. To a large extent, that information, which is data, at the end of that, what do they want? They want data. And all of these firms, whether it is Amazon or whether it is Google, don't control the data. They start to manifest your lifestyle. Look, so here is what is going to, in my view, the moment you get into a card, you get to understand Google today knows what you do. Maybe they just don't know you on your daily course, but otherwise outside of it, possibly they have every information of what you do. Like what is your spending pattern, what happens, where you transact. They today have a lot of information. Now, there is one small aspect of that information that they don't have, which is how do you spend and how do you pay for it? That's outside the purview, right? Once you get that, it's as good as them trying to understand your entire lifestyle. Then they start to create more intelligence around it and start to give you the feed to say, hey, you know what? It's been 4 months since you visited a Starbucks. You like this particular kind of a coffee. Would you like to go there? I have a loyalty offering. I have a, say, offering for you. Go there. Just transact. I will take care of everything. You don't bother. Now, the very fact that you are, say, 1 kilometer away from that and giving you a flash is a combination of what? It's a combination of past information, of analytics, of the ability to get you enticed to spend, is going to be under whose control? It's under Google, right?
Yeah.
Today you have information about it. So that, in my mind, it is about the data that they're going to bring together. It is about managing and changing and influencing your lifestyle. I would use the word more carefully, about influencing your lifestyle, and hence attempting a manifestation of how and who you are is what would Google be looking at. This is only one form of where they want to be in. Now, for them reaching out to the Kirana stores, yes, they want to digitize, they want to reduce the amount of cash, they want to bring them onto this platform. Now, they can hook up with small time inventory players who can connect the back-end supply chains for these Kirana stores. They can hook up that with you staying next door to them and saying, you know what, you're short. You've purchased this, say, 2 months ago. Do you want this? Do I order from XYZ who's next door to you? He'll deliver to you. Imagine all this happening over the next, say, 1.5 years. No, there is little that your intelligence, you will start to think, what intelligence are you adding to it? Because someone else is giving that intelligence to you. And you will start to think beyond. So to me, I would say that Google's approach to this goes beyond just cards. Google's approach is data and the lifestyle influencing that going to change. And a lot of these large tech firms value the data that comes in, value the monetization associated with that data, value how they call it enrichment of your experience. I would call it differently, depending on each one's mindset. But it's going to be interesting. So it's going to be very interesting of how they start to influence. Today, they've already started influencing a lot of information that's available, right?
Yeah.
So it's going to be a game changer in my view. Game changer not from spend, game changer from how they start to modify your thought process. That's going to be the differentiator.
Yeah, and I think it's a matter of debate, because there are I think select committees in the Congress also looking at. I mean, the US are questioning these big tech firms on what kind of confidential data you hold and why are you holding it. So yeah, I agree with you. I mean, there are two thoughts in this what we call as enrichment of experience. But I think days will tell us where we go. It sounds exciting, but yeah, there is one side to it that is compromising on the confidentiality of individuals.
That's their business. They are in the business of monetizing data. They are not in the business of monetizing data. They're not in charity business of taking it and just creating monoline of business line. It's not going to work.
Yeah.
So to me, if they are coming in, the larger approach would be how this strategy evolves. And then they become the super aggregator of what they want to do. So I would see some interesting moves there. And look forward to be a very, very, very interesting sphere for us to be speaking about in the next few, I would say, months.
Absolutely. I think all those who are in the payment industry, this is going to be exciting to see what's happening out there. So like I said, Mahesh, we have this two modes of queries that may come across your way. One is through the chat box, and I bring that question directly to you, or somebody may ask a question directly. So we have the first direct question coming for you. It's a very loyal participant in our program, Harish Prabhu. Is a very experienced banker. So he asks very intelligent, experienced questions. So Harish, can you please unmute yourself and ask the question?
Yeah, hi. Good afternoon, Mahesh.
Good afternoon, Harish. How are you?
Fine, fine. Yeah, actually, I was reading a McKinsey report from March, and this is pertaining to global, I think, trends, which says that in the shorter to medium term, 40% of the classic POS transactions, POS transactions are likely to drop by 40% or so. The second is that compounding is there's that Apple, right, which is currently using NFC technology within the, cards, which you have to store it in their wallet, right? And it's primarily, driven by a secure element, which is a chip in the phone. They now are actually on iOS 14, which is really going to be releasing in September, going to be allowing the QR code functionality. So eliminating the virtual card concept altogether. In India already, like the UPI, etc., all, QR code is there where you don't require anything. So are all these trends, global and Indian, a sure sort of precursor for the sunsets for cards globally?
So the way I look at it is, Harish, would cards, at the end of the day, if you look at Visa, MasterCard, and all of these card brands, look at their entire investments, where they're headed for. If you step back and look at all of their investments, especially MasterCard, I would say, and they have started to look out for opportunities beyond traditional transaction processing or card-based transaction capabilities, right? You've seen them playing in the central infrastructure, real-time space, cross-border remittances. You've seen them play in the loyalty space. So they have also started to expand over and beyond traditional cards. I would say that eventually what will happen is they will want to retain that brand. So card in its own form may continue as a shape, I would say. The feature set within the cards will change, and it will give you forms of flexibility that you would never have heard of. That's my wishful thinking. Now, we never thought of NCMC 6 years, 7 years ago. Today is a reality and we're using it very fairly well. What is going to happen, in my view, is your brand that is associated with what you carry. At the end of the day, what happens, Harish? When you go to a shopping center or when you use it on a POS, that piece of plastic is essentially a brand and a vehicle for you to transact. I would say that will continue to exist in some form. The usage of that and the functionality and enrichment, as we use the word easily, enrichment is going to change. So you will see the card becoming a far more powerful mechanism, allowing you to have different modes of transaction. But as a brand, it will continue. So maybe if you look at it now, I keep debating this with a few of my own colleagues. Why can't I have a RuPay with a RuPay as an integrated card coming in with your citizen's ID or a PAN ID or whatever, right? There's one ID. You just don't need to create so many different cards in your pocket. But if you have an acceptance point that gives you that ability and it's one card which shows all, you're just carrying one. And it establishes an identity. It establishes a mechanism for you to transact. And it gives you options. And if tomorrow the acceptance devices gives you option to transact direct to account or direct via through a card, a PAN, why not? So to me, Harish, a long-winded answer, but I would say the cards will exist because it carries the brand. The cards will emerge as very different forms of capability. Yes. So that's going to happen. Your card is going to become far more powerful in a way how it allows it through in combination with the acceptance point of terminals. I think that's my take on it.
Yeah, but
Thanks.
but Mahesh, thanks, Harish. But my question to that to you, Mahesh, is that uh, payments. See, you're saying cards will exist, but payments are becoming instant. Also, payments are becoming invisible by nature, right? Uh, so it will be embedded in the customer's journey for payments, whatever else he does in his life. So, do you still think that that payment cards will exist, or is it the end of it?
I wouldn't say it is the end of it. I would say that the number of times you will use a card may reduce. Means
Okay.
if you ask me, will you use your card for every say one in say 8 out of 10 transactions that you do is today using a card in a good normal day. Forget about the
Mhm.
COVID pandemic days, right? So
Yeah.
one in 8 out of 10 will you use a card. You would not have used UPI to that extent to what you're using today, right?
Yeah.
I would say it will. I don't see a need for it to change so fast. What will, I would say that the number of times you will use the card to swipe it or to insert it into an EMV, those will change. You will probably have the card as a brand carrying in your pocket, which essentially will probably, you don't even need to take it out. It is linked to your wearables and you use your wearables to transact. That's it. You're still using it, but you're using the one that's linked to your mobile and mobile to your wearables. That will transact. So mechanisms of transaction could change.
Okay.
But the fact that the number of plastics may probably reduce by 10-15%, but I'm not seeing that as being as dramatically dropping so much. That's my take. In the next 4 to 5 years, that will continue. Eventually, yes, eventually one doesn't know there are going to be far more different modes of transactions. Technology is emerging on a day-to-day basis, and 6 months what was available 12 months later is going to be something very different that we're talking through. So
Yeah.
that's my 2 cents on it, KK.
So let's look at also the survival from a open banking and a neo banking kind of environment that is fast emerging. You think with open banking and neo banking, cards will survive?
So the virtual cards will take over. I'm saying neo
Yeah.
bankings and everything are going to give rise to virtual bankings. I'm saying is, I don't see them issuing plastics there. I'm saying they may issue one plastic for you to keep in your pocket because
Okay.
that's a brand, the brand
Yeah.
recall, right? So there will be one there, but from a transaction perspective, facilitation of a transaction,
Yeah.
they will use everything virtual. Why not? So because that will give you flexibility, that will give you more confidentiality within your own environment, and accessibility into your own, I would say, spectrum. So I would say that for sure going to happen. I would take neo banking is going to move you towards virtual, not much plastic, not much physical. Physical will still be more of an issuance based on a brand recall.
Okay. So, so ladies and gentlemen, we are just about less than 10 minutes to the hour. So please send in your questions early. Avoid sending it at the last minute because then I'm not able to get it across to the guest. We value their time. Mahesh, moving ahead, how does the adoption of let's talk about technologies. How does the adoption of machine learning and artificial intelligence into the payment industry affect the evolution of payment cards?
Well, I would say that cross borders, look at the ability for bringing in more efficient cross border using the blockchain. I would say those are great examples that today are not exploited to that extent. Today, some of the reasons why we are still not going full hog on some of cross-border remittances on cards and everything, there's still settlement issues, mechanisms issues. There is still struggle in terms of ensuring that there is integration across various different countries having their own implementation forms. So to me, a classic use of using blockchain would be in terms of cross-border payments, and also in terms of facilitating cross-border transactions, which I've seen some of it's going very well in some countries like Europe. Now you will see purchases which are happening by entities who are sitting in Europe, but are happening in Kenya, are happening in Zambia, because there are some companies which I've seen are fairly innovative, where now they have a combination of the card and differentiated payments on the front end, being very well integrated. And that's all on the back of, if you see their underlying technology, they use effectively some of the blockchain capabilities, and they're doing pretty well. Those are very thoughtful ideas and very innovative ideas that are starting to differentiate what's happening in the market space. So if you ask me, uh, will blockchain make some game changing? It will. Will it help directly on the cards? Yes, to an extent. Where it really will become useful is on the RTP side, where that's going to help on the trade payments a big way. So I do see some significant adoption of blockchain on the trade side, but that'll be more on the real-time payments.
True. To me, I think the blockchain will help in the demonstrating traceability. If you are doing transactions across the borders, across 2 or 3 countries, then the tracing it out becomes a big issue. You are not able to link it because each country has its own systems, its own core banking, etc. And so to bring all these transactions in one chain is difficult. So perhaps blockchain would. Do you agree with that?
Yes, absolutely. I do agree.
Okay. So let's look at another aspect to the payments. So the payments, if you look at the talent that is using the payment systems in the companies, okay, banks and others, okay. So these are like there are so many payment systems that have evolved, and there are so many underlying technologies, security, APIs, interoperability among these. Uh, do you think there should be a formal education on payment systems and their underlying technology such that it becomes like a formal education? Because at the end of it, 80% of the transactions of any bank is still payments, right? So do you think there is a need to get into some kind of formal education?
I would say more. So let's try and split this across a couple of areas. I think a lot of banks have started to realize that there is a business aspect towards how they should manage a payments business. There is a technology aspect of how they manage the delivery of technology and the enablement and delivery of the technology. And more importantly, when you look at the sustenance part of the story of your entire business and operations, it's all about delivering it in a sustainable, secure, fast way, which means the whole risk management aspect of the story. So to me, I think today banks and a lot of the financial institutions and fintechs are in very different forms, different tiers of where they are evolved in their maturity curve. So I would say that there is a need for an evaluation of where one is vis-a-vis their own business priorities. A very large bank may have some very good mechanisms from how they outsource and manage, but may have challenges on the risk management side, especially when it looks at its digital payments ecosystem. There could be small banks who do not understand the business of how to drive the whole digital payment ecosystem, but are very keen to do a Me Too, right? So to me, I think central body which really talks about how you should be adopting digital payments, how should be managing a digital payments infrastructure, and what are the risks and controls that one need to be putting in place, and how it should integrate into the larger business ecosystem of that entity is very critical. And these are, in my view, is a great opportunity for some of the entities who probably have good understanding, but would need to be tailored. It cannot be a one view all. It
Yeah.
will not work. This would be fairly tailored to organizations depending on their business priorities and their strategies. But yes, the more and more I would say that each entity begins to understand and appreciate where they are in their evolution and maturity curve for each area. I would say that it gives us better ecosystem because one is going to be not following very risky practices, and that's going to help you. At the end of the day, everything costs money. Everything relies on economies of scale. So I think people will, and all businesses will start to realize what is core to them and what is non-core, and more importantly, how to manage the non-core more effectively. I think that's going to be a very good, important learning as we start to grow.
Okay, thank you, Mahesh. So my last question to you is that we are almost close to the hour. Do you see payments going as a software as a service, SaaS model as we call it, focused on serving, for example, maybe restaurants or college students? So you think that kind of model is evolving?
So I would say SaaS models will begin to, it's currently being treated as a horizontal.
Okay.
To me, SaaS is the way forward. And to me, if SaaS is the way forward, it will eventually become a vertical, I would say.
Okay.
And once it gets into vertical, I would say that there will be fair amount of opportunities where it will start to define how businesses operate. And every vertical will start to see how they rely upon each other for an overall ecosystem to survive. So a very simple answer to what you're saying is, I would say SaaS is the way forward. Very simple, no two ways about it. SaaS will eventually move from becoming a verticals, which means it becomes a line of business in itself. And it will define how various other businesses really interoperate with itself. That's the way I look at it.
Okay. Thank you, Mahesh. We have one question which is coming directly. Are you okay to take the call?
Yeah, sure. Absolutely.
Okay. Yeah. Tyag, can you please unmute and ask the question quickly?
Hi, Mahesh. Nice to see you back on our BBD on EPS platform. Yeah. Quick question. The recent RBI's announcement of acceptance infrastructure fund of 500 crores, out of which 250 crores is being deployed. The question is whether the fund is being used to onboard acquirers, because onboarding is a big cost. Besides, will there be installation of devices at merchant locations, and specifically what these funds will be used for at the tier 3 to tier 6 cities to bring the customers as well as the merchants on board?
So sorry, Tyag, I was a bit confused. So I'm saying is, so your ask is, how will it be utilized, or is this So obviously, I think obviously the government's mandate has been very clear. I'm saying they're saying, how do I drive digital adoption, right? And if you let an acquirer play is going to say that, no, I'm not going to go and invest in tier 3, tier 4 cities where issuance and my acquiring infrastructure. If I put in the acquiring infrastructure, will I get the returns on it? What will be the adoption? There are a lot of other questions. Any acquirer will do it, right? So I think RBI's game plan in terms of saying that, can I invest or can I further the acquirers ask to go into the tier 3, tier 6 cities and to put in this infrastructure, support that infrastructure to be able to create the digital ecosystem? I think it's a good ask. What's more going to be important is how does one measure the success out of it? That is going to be very, very critical, because if you're not going to measure success, you will start utilizing the funds by who cries the most and where does it come into. Because a lot of these investments need its measurement on how it is getting invested and returns on it. So to me, that's going to be very, very important. And returns by not in terms of saying a return on the investments, returns on saying how well is the digital adoption happening. That's critical. So I would say, spoken with a few people, it's all about RBI attempting to surge ahead with the digital adoption. So in my view, as long as they have the right governance, they have the right entity with whom they are backing, I would say that it is a great way forward. So we have to wait and watch, in my view.
All right.
Thanks, Tyag. Thanks, Mahesh. I think, ladies and gentlemen, we have come to the conclusion of this dialogue with Mahesh. It was, as usual, very enriching discussion on the payment of future cards. We talked about tokenization, we talked about CIBIL, we talked about mobile being used as a way forward. We talked about ecosystem, the open ecosystem and the closed. The virtual card seems to be a real excitement thing that's going to come through very fast, because it's already started getting adopted in many other countries. Data as a key, as a commodity for big tech firms. We spoke about SaaS as a model, enrichment of experience as another model. So the longer term future of the credit and banking industries will be dominated by the impact of technologies such as we talked about AI and risk and blockchain, and risk management, financial planning, and all these will come into play. So there are, will the future of cards survive? Will cards survive? I think it will. It will. That's even this of Mahesh. Maybe the model we use it, the frequency we use it may change, but it is there to stay, and the way we use it will change from the days to come. So Mahesh, thank you very much once again. A lot of information that you have given to us and the participants. We thank you for your time. 1 hour you spent with us is very enriching. Thank you very much for coming over.
Thank you, KK. Thank you, Mani. Much appreciated your calling me over. Much. Thank you. Take care.
Thank you, Mahesh. But ladies and gentlemen, to add to this talk that we had, we want to play a small clip, which is which was played at the Global FinTech Fest. So I request the digital team to play that video just to give you a more perspective on this entire card payment business.
The largest online fintech meetup is here. Fintech with and beyond COVID. 2 days, 3 parallel tracks plus workshops, 40 plus sessions, 50 plus countries, 70 plus booths, 100 plus speakers, 10,000 plus delegates, 1 lakh plus viewers. Meet, learn, discuss, collaborate on an unparalleled digital platform and global scale. Register now at www.globalfintechfest.com. Fintech with and beyond COVID.
Thank you very much, ladies and gentlemen. See you tomorrow for another edition of Banking and Business Dialogue.